Welcome back, everybody. Let's take a look again on the gold market. Sive Morten is here with the Forex Peace Army.com. As usual, we have prepared the vehicle report because, currently actually gold is becoming a bit special market where it is getting the absolutely different driving factors compared to the other financial markets, such as bonds, currencies. Yes, it also reacts on the same stuff like the Fed rates and other things, but the geopolitical component right now is playing the bigger role, or is taking the bigger part among the other driving factors, and it explains why the gold behaves differently. So today we take a look at the short-term and longer-term perspective. With a longer-term story, more or less everything is stable, so we expect that demand for the gold will stand and actually should provide sufficient support for the gold market and other precious metals. But in the shorter term, gold market and in general other precious metals and silver market could shake off the speculators, because obviously the price right now is overextended and shows the strong deviation even from the statistical point of view from the, let's call it as a fair price. It's just the impact of the emotions. And taking it all together on some technical issues, especially with the liquidity inside the United States and recent Fed initiative, which is starting buying bonds and starting the quantitative easing, we see that the chances for this volatility and big retracement on the gold market is increasing. Because if you take a look carefully on the Friday performance, you will see that not only gold market has shown the pullback, and if from the technical point of view I could explain why this sell-off has happened, and you actually probably see it by yourself, it's difficult to explain why this has happened a lot on all markets. Actually, silver, gold, some technical stocks have been dropped significantly, Broadcom, Oracle, and some others. We suggest that Fed is losing control over the long-term tail of the yields in the United States. Announcement of the quantitative easing and the picture that we see on long charts of the 10-year bonds and dollar index tells that rising of the yields might be up to the 5%. I'm speaking right now on the 10-year bonds, and this rising of the yields might be pure inflationary factor, because we do not see any bullish signs on the dollar at the same time. So that rising of the yields might bring some pressure, and if it will happen really fast, it also could trigger the liquidity issues in the United States, which is also could trigger the pullback and sell-off on the gold market and other commodities. Things that we saw actually recently with the big drop on the stock market that has happened previously, every time it triggers the retracement on the gold. So if you would like to know more details about this story, you could read the report. I will put link as usual down below the video. So now let's turn to the second question of the trading plan for the next week. So as I said, from the technical point of view, it is easy to explain that why the sell-off has happened. It's just because market has completed our major target that we were following within a few weeks, even almost more than a month, but this ABC patch now it finally has been completed. But I have a good news for bulls, at least for now it stands as a good news. If you take a look on the weekly chart, we have the bullish grabber. This grabber still keeps chances to retake and retest this previous top. At the same time, we do not expect the real breakout because of the overbought condition on the weekly chart. That stands right in the same point as well as on the week and as well on the monthly chart. And together with the technical fundamental issues that we have on United States in the United States financial system, so real breakout will be really difficult in the current circumstances. But some minor upward action floating around the top is quite possible. Besides, this grabber gives us a big advantage, so we do not need to consider the all upward action. We just need to focus on most resting swing, because our stop has to be placed based on this most resting swing. Because our ABC pattern is completed, we do not have any other clear bullish patterns except this grabber. But the grabber has invalidation point right there, around 4170. So that means that the lowest level that we need to consider for a coming week is 4170 and any level that stands inside of this range. That's it. So it makes much more simple to dealing with the situation. On the daily chart, in fact, as we've got this triple to sell, especially with the slowdown of the city leg, we theoretically should be ready for a deep retracement, 30% at least, because this is Gartner's triple two. But once again, here we have the grabber, and that's brings some limits, put some limits on a possible downside action. On the 4 time frame chart, you could see that OP has been finalized perfectly with this butterfly pattern that we also discussed, but we hope that after the 127 target right there, we will get slightly deeper retracement, hoping to come aboard with a possible upward action to the OP. But this hasn't happened. Market has shown the straightforward upward action. It's complete OP right in the moment. So it actually has happened very, very fast. Now butterfly shows the normal pullback, and the only level probably that we could use from all the three of the fib levels on the 4 time frame chart is 42.17, because it stands above the lows of the grabber. So this potential level might be used. On the hourly chart, we have some other fib levels, although you can see that they stand relatively wide from each other. You can see this big distance between them. I think that an area around 42.60, 42.50 is worth of our attention. And the second is an area of the 42.17 and 42.40. It's a bit wide confluence, but we could use it as a kind of the critical level for the weekly grabber. So obviously, to keep grabber on the table, market has to stay above this area. So it means that most interesting stuff should happen somewhere above it. Here we have relatively strong sell-off, and our task based on the grabber obviously stands with the chance to take the position as close to invalidation point as possible. That it means that currently I think that we should not be too actually hurry up with the decision making. Sell-off was relatively strong, as we have the pullback. Let's see what will happen on Monday. So if we will get some return right back down, maybe we'll see some patterns are forming. I'm not even excluding the possible kind of the A, B, C, D pattern to the downside. Whatever it will be, if it will not be contradictory to idea of the bullish grabber on the weekly chart, it will improve our position. So if even market will retest the 42.60 and we will take position here, it will be all the better than taking position right here. So that's our plan. We still have the chances for upward continuation. We have the bullish pattern on the weekly chart, but we just need to get a bit better conditions for the entry, for possessing with this pattern. And I suspect that somewhere around 42.60, but if we will get a bit more lucky, we even could get some deep action. We should get something. So I would stay aimed on an area between 42.40, 42.60, somewhere in this area. Let's watch for patterns, market reaction, what will happen in the nearest days, and then we'll make a decision on a possible entry.